Hello guys, I have one of my subscribers ask me a question. Why don't you trade options? Okay, in this video I will try just to give you some reasons why I don't trade options. Now, options by definition, they are a contract. Okay, a contract to buy an underlying stock, okay, with little money. Now, at first you say, "Oh, it's good. Why control $5,000 stock, like 100 shares lot? It's one contract. It means one option. How do they give me $5,000 and I only pay $200? Okay, no one give you $5,000 and you give him $200 and you control his money. Never. But there is a trick in the options. Okay, what's the trick? The trick is you buy with little money, but the trick is if you are out of what we call the strike price, okay, you will lose all your money. If you are within the strike price, for example, if the stock goes little bit, underlying stock, because each option should have what we call underlying stock. For example, let's say Facebook, it is $50. Okay, they give you the option to buy 100 shares, which is one contract, with only $200. Just an example, okay? Let's say an example. How can they let you control $5,000 with $200? Okay, so because there is a trick. Because if the price goes, for example, to 45 or 43 or some, you will lose all your bet. It means this $200 is gone. Suppose that you buy, because you know this is like a bait in a hook. Now all the people who buy options, few of them make money and all the others will lose money. Why? Because the movement of the price itself, up and down, you will lose that much. You will lose a high percentage. Sometimes, most of the time, you lose all your money. Okay, suppose that you buy, let's say, 5 contracts. You in 5 contracts with $1,000. Okay, and suppose Facebook was 50 and it goes to 48 or 47 next day. What will happen to your contract? If you are out of the money, what is left from the contract is just the time you buy this strike, for example, this month or next month. This is what is left, but all your money has gone. So from 1,000, maybe you will find 100 left or 150. If the stock is going up again, okay, you will be maybe lucky in the future, 20 days or 30 days. If it goes again, you will break even or make little money. But if it is the end of the contract, okay, and you don't sell, for example, your 1,000 becomes 150. If you don't sell after the contract's finished, it will be worthless. It will be zero. Okay, it will be zero. You have nothing. That's why it is a trick. They try to hook you up. It's like fishing. They give you a small bait. Okay, they give you something that it is imaginable. How can 5,000, you buy 100 shares of stock like Facebook, let's say it's $50, now $5,000. How can they give you for $200? First, they sell you the time of the contract. For example, 1 month, 2 months, 3 months, or 6 months, or 1 year. They sell you the time. In order to stay in the stock, they sell you the time. Okay? This is one thing. Second thing, that if the market is against you, you will not lose 2% like in the stock market. Like in the stock, you lose 2%, 1%, 3%. You can lose 30, 40, 50, 70% in one day. Okay? That's why it is so risky. In terms of risk and reward, you risk too much and the reward is little. So for me, it's over. I will not do options. I will not do futures. I will not do commodities. I will not do that stuff, because if you lose, you lose too much money. And for me, I'm trying to do a safer trading investment. Okay? I want to see my account is going up each month or each week or each 2 weeks. I see my portfolio going up and up and up and up until the end of the year. Okay, and I want to see my stock, my portfolio. In one day it is 100%, for example, and next day I lose 20%. Losing 20% of your account is too much money. And since you go to options, you will have a problem of losing too much money. It's the same when you go to penny stocks. It's nearly the same. Because, but options are more risky than penny stocks itself, because if you are out of the strike, you will lose all your money. Believe me, if you have did the options before, you will do this. So even if you want or you like to do options, don't do like 5% of your money or 10%, but don't play that much with this, because you are betting on the direction of the market, and if the market is against you, they will hit you and they will take your money, whatever is money. Even if you put $200, if tomorrow it is 100, you are losing 50% of your money. And in terms of trading, losing too much in each trade is a big mistake. You can't be a professional if in each trade you lose 50% of your money. For example, you have $10,000 and you buy options, and suppose that the next day, okay, all the stock market go down, so you will lose 50% of your money, and you don't know. If you stay more, you become to lose more and more and more, and then when you reach the strike price, you will be out of the money, and then it's over for you. You lose $10,000, okay, like this, without any. That's why the stock market is risky. So you should try to see the less risky and you do it. Don't go to risky investment because of your greed. You want more percentage of your money, or you say, okay, if I buy 200 an option, tomorrow if the stock goes from 50 to 54 or 55, or next week I will make 200 more, 300 more. Yes, you can make, but who tells you that you can make that much money? And think about what you lose if the market is against you. If you say, I don't care, it means here you are not trading, you are gambling. And here you should, if you want to gamble, why you don't go to Las Vegas for one weekend, or you have $10,000, you go there, you blew them up, and you go home without any money, okay? At least you have fun, you see a lot of people losing, and you have fun. But you don't want to have fun, and you want just to give them their money. So this is what will happen to you. Okay? For these reasons, I don't trade options, and I don't mention them in my channel. I put 2 or 3 trades about options, because some subscribers, they ask me what are options.